Welcome back to Trade Pro FX. Today is another amazing video that I'll be talking about the fair value gaps. You can see I'm on the 1 minute. So these fair value gaps or gaps, how they are formed by candlesticks and how the market tends to fill them. So stay tuned so that we can explore these strategies. You can see this is a gap here. From there, that's a very good and big gap. And remember, always these fair value gaps you can see them on different time frames, be it 30 minutes, 15, 5 or 1. So you can see those two fair value gaps, and in between you can also see there are other fair value gaps, and the market have already filled those, and you can spot another fair value gap along this zone here, and then the market is already feeding it. So what do you expect? That the market is going to move from wherever it is there and then go upwards, try to fill all those gaps that it has left. So those are the inefficiencies that the market has to go back and fill. So the first thing you have to understand is what is a fair value gap. A fair value gap is always um, is represented by an FVG, which occurs when there is an imbalance in the market caused by sharp price movement. So it's just a space between one previous candlestick, be it using from the wick and or the body, and the next candlestick wick where there is no trading that occurred in between. So you can see after you are done getting the fair value gaps, you can calculate your candlesticks and see the time it has used to move to that direction of the market. So like here you can see approximately, we can see it is around 30 minutes. So with that in mind, so you can decide to enter and do something we call swing trading and wait until the market to go back. Don't mind these. I was looking for some APL fixtures. So let's dive into the Deriv so that we can show you how you can pick the trades based on the time frame that is on the Deriv trader. You can use the MT5 if you need to take market. So one thing you need to know, why the market why does the market fill those fair value gaps, is that the market always are always driving for these inefficiencies. So when a gap exists, all traders look at the price to revisit and fill that gap before continuing to its normal trend. If it was on a downtrend, it proceeds to that direction. So FVGs, which are the fair value gaps, can act as zones of support or resistance, offering those offering prime areas to enter trades. So when you just see such, look for fair value gaps on any time frame, and then just know the market will go to fill those gaps. So that is for swing traders. So when you just log into the Deriv trader, you'll see like here this is volatility 100. Before we were looking for volatility 25, but this being 100, you can see up above we have some gaps. So you can just pick using a time frame of 30 minutes as I've shown you. So whenever you get your profits, you can just exit. So you see here we have our time remaining 29 and above and some minutes. So you see we are already we have already entered on some profits, so you can just exit. That's the betterness of using the these Deriv trader. So it is more precise and unlike using the ticks, which are very fast paced and prone to some noise, or let me say minutes gives you a better market clarity. Like now you can see we are on profit. So if I decide to cross this on profit, it is worth it other than using the ticks. So with a better analysis, when based on the candlesticks, without necessarily not relying on indicators, but looking at how the candlesticks are forming, you can scalp and observe patterns like breakouts, reversals, order blocks. And you see, let's just reduce this now to around 1 minute so that I can start beginning to scalp. Yes, you can see that candlestick there. We have vented on that, so it's very fast. You wait for the turn of your profit. So you can see there is an area here which there is a fair value gap. It is the market is near filling it, so let's first cross at that profit. So when you cross at that profit, so I'm observing some things like the fair value gap. So let's sell there. Yes, yes, we are done. So automatically looking at this, the market has not filled well that fair value gap, which is around that point. So definitely, if you are to trade, you enter a sell. Yes. So let's wait for the next candlestick and then we scalp using a sell. So if you are to observe, I'm compounding what I'm getting as the profit and the profit and the original capital, so that I can reach my profit target. Let's aim reaching this account to 20 USD and we call it a day. So you see this fair value gap along this point here. The market must go back and fill that fair value gap. So what do? You just get an idea that the market will move down and wait for that point. So let's see how the market will behave at the next candlestick. So yes, remember I've told you that you need to look for good entries so that you can get these opportunities. So let's just change to our normal 20 volatility 25 index that we were looking above and spot whether we can see some entries. You see these gaps around the upper part there, they must get filled. So that point along that point along the highest point there, the gaps must be filled. And if you just look from behind, most of these inefficiencies have been filled and the market respects that. So currently we are on an uptrend. So looking on that point, I can see there is a fair value gap. There is a fair value gap maybe which wants to get created. So let's just wait for how the market will behave and we can scalp. So looking again, I can spot an order block on that point. So let's enter a trade and wait for scalping, because the market is making higher highs and higher lows, higher highs and higher lows. And let's see whether we will scalp very fast and exit. So at that point, let's see whether we will exit the last point. The last time we enter on profits, we exit. We enter on profits, we exit. That's the betterness of using these concepts. So you see at 2.28, and so we just get out of that with a profit and compound my my stake. So it is at 11.98. Okay, so let's wait again and scalp that. Yes, you can see on my observation I can spot an order block. And remember, order blocks are areas of consolidation where institutions place bulk orders, but this one is for a 1 minute time frame. So we still believe that that order block below will we will have some resistance. So we are targeting to make some sales, some scalping on sales. So when you spot and identify such a zone, when a zone where the price price where the price will consistently react, you can target some entries. So you can see we are at 13.48, still observing that order block whether it has been reached. So we are still targeting a sell. So let me zoom out and see. This is the area I'm talking about here. That one, that candlestick which shows a green candlestick, that one is an order block. So with that order block, the market will move up. So after it has reached at that point, we know the market will automatically go up because of just observing that order block. So you can see we have already scalped that at 15. So we still increase our trades. We said at 20, and that's how you make trades on the rise and fall. So it's very easy, just keeping an eye on the movement of the candlesticks. So when you just keep an eye on the movement of the candlesticks, you can try scalping very easily. So you can see, so the next step is looking at how the market, remember the market, we are targeting a rise on this market, but when an opportunity for sale comes in, we pick a rise. Like now I'll pick a rise, yes, because the candlestick has already reached on the order block, and we scalp and get out. So you see at 18.83, so I still compound and then wait so we still observe again, we enter a rise because of that order block. So enter rise, yes, and we reach at 20 and exit. So that's it for today's session on Trade Pro FX. We have covered how to identify those fair value gaps and order blocks, and why minutes are better for trading the rise and fall contract. That's how we scalp effectively with candlestick analysis. Make sure to like, subscribe, and turn on the notification bell for more trading tips and strategies. And you can see on this video, we can spot that the market has been changing for moving after it leaves some fair value gaps, it retrieves behind and fills all those fair value gaps. So let's meet in the next video, and trade smarter, not harder.